Welcome to FinScale, a podcast created by Solène Niederkorn, shedding light on innovation in finance, banking, and insurance.
Building trust in digital assets. Siobhan Moret, director at Saffery Champness.
Yeah, there's a few different triggers. So the triggers can be personal or the triggers can be business related. The business related triggers are, hey, I've got a company or I've started something already and it's in my own name and I don't want to have it taxed in my own name. But generally it's they're creating something and they're looking for the best possible way that they can start those activities. They've created an asset, they've issued a token or something similar, or they're creating a DAO, for example. And they will generally reach out and get some legal advice. And the legal advice will say, your best options are, A, B, C, and D, foundation or a trust or a purpose trust or something similar.
There is nothing I enjoy more than exploring complex and intriguing areas of finance with you. In this podcast, my guest from Switzerland sheds light on fiduciary services, trusts, and their relationship with wealth management, as well as common misconceptions. We discuss the use, benefits, and drawbacks of trusts for holding assets such as rainforest deeds, IP, and digital assets, and the importance of fiduciary duties and governance. We also touch on the typology of clients using trusts, including pioneers, founders, and experienced investors. Siobhan mentions the evolution of regulation and the interest in building trust in Switzerland, along with the controversies surrounding the Pandora papers. During the conversation, she talks about the challenges of building trust in the context of digital assets, including specific use cases such as the inheritance of NFTs and the creation of a token foundation through which DAOs with their own on-chain treasury can interact with the off-chain world. She explains the partnerships Saffery Champness is building with service providers in traditional finance and the crypto ecosystems such as Coinify. Enjoy the show! Hello, everyone. Hi, Siobhan.
Hi.
Good to see you. Not in Chamonix, but in a video conference. Thank you for accepting my invitation.
You're very welcome. I'm delighted to be on.
Yes, so we had decided to talk about Chamonix this week. No, it's a joke. We have a great passion in common with Siobhan, which is Chamonix, but we will concentrate on fiduciary services particularly. May I ask you to quickly present yourself and explain to us where you come from and say a few words about your entrepreneurial experience in France? So interesting, exciting.
All right. So obviously, fiduciary services are infinitely more interesting than Chamonix. So I will focus on this as well. My name is Siobhan Moret. I am a director here at Saffery Champness, which is a trust company operating out of Geneva. My personal background is I've been working in trust for quite a few years, actually, but not all at one time. So I started off in the trust industry in the Isle of Man, where I was brought up. I'm originally Irish, actually, with Dutch parents, so I'm a total mix, which fits me in very well in Geneva, I would say, because so is everyone else. I moved to Chamonix when I decided that perhaps corporate life wasn't exactly for me at the age of 23. And then I embarked on a long period, about 12 years of being an entrepreneur in France. In the ski industry, I had a property company. We built up to about 70 chalets. I had a boutique B&B. I had a bar and restaurant, just all of these different things and life that seems far away right now. But in the end, my entrepreneurial life in France came to an end. As I was close to Geneva, I decided it was a good idea to reprise my corporate career. And there is a very flourishing trust industry in Geneva. So it was a natural thing for me to come down here and to start working again in this industry.
So, yes, this is a topic that I've not covered at all since now 3 years. It's fiduciary. We just talked once about fiduciary in the context of France. What is interesting for me is that you share with us some info about trust industry and how entrepreneurs and particularly high net worth individuals implement wealth planning strategies to protect their legacies. So maybe we can start by this very simple question is, can you explain to us what fiduciary services are and how they relate to trusts?
Fiduciary services is not to be confused with fiduciaire, which means something completely different in French, and is not the same service at all. In fact, a fiduciary structure in common law is where a trustee legally holds and administers assets for the benefit of another person or a group of people. Mm-hmm. So this is normally traditionally through a foundation or a trust, together with maybe an underlying company holding assets. And these assets, it's without restriction. So you can be mundane bank assets or quite exotic. We have had things like rainforests or, deeds to IP, down to blockchain and digital assets like we'll talk about today. So in short, by law, a trustee is required as their fiduciary duty to protect these assets with the best interests of those beneficiaries in mind. And that's according to the trustee that's set in place. So the provisions of the trustee. They can be attacked in courts if they don't do that correctly.
Okay. And what are the benefits and drawbacks of using that kind of vehicles for estate planning or asset protection?
Well, the most common way that these structures are used is for succession planning. And that can be in either personal succession planning, where you're talking about your own family and you want to succeed your assets to your beneficiaries, or it could be a business scenario where you want to pass on that business either to family members or to others, or even can be in a donation perspective. So like a charity, you're committing assets to a charity and you want it to be distributed in a certain way, which is in accordance with your wishes. Also, we often commonly see in complex transactions where trusts are used, which is like a safe space really to bring together parties from different universes who, like a referee, to referee those with different goals and needs. We bring the skills together to help them to manage that transaction. The benefits for the different parties involved would be, for example, you have a regulated party. So that's comfort. It provides peace of mind for all of the parties that are involved. Governance, we are regulated generally. And also we have this fiduciary duty, which is another layer underneath that. So it ensures all the correct processes are met, legal requirements are followed, that all of the tricky legal aspects are looked at, taken care of, and we're required to do that. It also provides an uninterested party. So it's someone who is independent, who is not on one side or another, who gives the people who are involved the right powers, the right benefits, and to make sure that the transaction is completed in the most proper way.
And in which areas worldwide is it the most used? And are there more? But where is it located when you build those structures?
So we deal with mostly international clients. From Geneva, from Switzerland, we're in a great position where they recognize trust, but we are free to use any kind of trust law that we desire, or that the client desires, or that they're advised to use. And there may be specific trust laws that they're advised to use for specific reasons. So essentially we're working with clients from all over the world. In some cases, trusts may not be appropriate. So we work with trusts and foundations. Trusts are a common law concept. Foundations are a civil law concept, and they may well be used better in one context or another, depending on where the beneficiaries are located, where the transaction is located, where the asset is located. So there are many ways that we can implement these kinds of solutions. But actually, there's a broader landscape to that. The trustee is now involved really more in a structuring role, because you're bringing, as I mentioned before, we mentioned governance, the level of regulation, etc. So trustees are now bringing this to a wider context, because trusts and foundations are flexible. They can be used with many assets, but sometimes they're not quite appropriate in the circumstance. So we're also talking about using, say, Luxembourg companies, where we administer them from here. We do the administration side. So we're used to administering entities in general. So we're very comfortable with unusual assets and applying different types of legal entities to them, whether that's trust, foundation, or just a company.
So different jurisdiction located in different areas.
Yeah, I mean, the big draw of a trustee in their skill set is the wide view. So they are often working across a wide set of assets. They can be normal, quite mundane assets, or as I mentioned before, quite exotic assets. So they're not restricted by assets, depending on what kind of trustee you've got. So you could have a bank trustee, for example, where there would be more restricted, but an independent trustee like ourselves generally is really quite open to look at all sorts of different assets. And we do, which is why we can look at things like crypto and blockchain. You're not restricted in the type of assets that, say, a trust can hold or any other legal entity is designed to hold. So we can work over all of those. So we've got the wide view. We're working over multiple jurisdictions as well. We're really used to working with many different jurisdictions and making those parts fit together like a jigsaw. And we're also, aside from that, we're also used to dealing with lots of types of different assets. So our skill set really is financial and legal literacy. That means we're able to translate quite complex advice into terms that a client can understand. We're comfortable with unusual assets. Also, this governance element, which we've talked about before, which has really become quite important and is a big piece in today's world, if you want to be able to operate, is to know someone who knows how to apply governance to a structure. And then we've got complexity. So we're used to dealing with very complex transactions and finding solutions for them. So our networks are very wide. We work with lots of different advisors, lots of different financial institutions, and we pull all those threads together.
Yeah, we'll discuss this. Yeah. What is interesting, just to close that first part, which is important for me because I really want to understand how it's working. So in my experience, there are a lot of misconceptions around trusts and foundations in general. And in your opinion, what are the most common misconception people have about trusts, and how do you think we can address all those misunderstandings? And maybe it's because it's very complicated. It seems from the outside very complicated, and you have a lot of, I would say, noise around all those vehicles when we had banking secrecy at the time where you had offshore places in Europe.
100%, I can say that the biggest misconception is that trusts are used for criminal activity or to hide assets. And this is simply, and quite frankly, outdated view. It is not of this world anymore. There has been an awful lot of work done in the last 20 years over the trust industry to clean it up. I would say that is 100% the biggest misconception that exists for people who don't really know about trust. So they immediately step back a section. I think that the press has a big role to play in that, especially in the UK, for example. But around the world, the OECD obviously have put an awful lot of pressure on the trust industry to clean itself up. And actually, I would say that we have a good result now, because we have a point in which, and I can use the Pandora papers, which is the last kind of expose that came out about the trust industry, as an example, which basically fizzled into nothing. And it was quite heartening for me to see that the trust industry was able to go, well, hold on a minute. Are you talking about a legal issue, or are you talking about a moral issue? Actually, should people not be able to structure their assets because they have a transaction, take advantage of certain structuring benefits, be able to succeed or to plan in advance for success, be able to deal with, privacy matters, which is very important for people who have high levels of wealth. If those people should be allowed to deal with those things. So therefore, it was actually something and nothing really in these Pandora papers, and it became really obvious they were working off old data, which was very outdated. Everything had been updated, and the trust industry threw open its doors and said, "Come, because we have done everything.
We did our job.
We did our cupboards; they're in order."
Yeah.
And so that's that's regulation. Of course, the regulation has been a massive part in that.
Yeah, and to conclude with this, regulation has evolved so much since I joined private banking in 2003. But I don't have any idea about the regulation for trust. And how did it change over the last 15, 20 years?
Well, I think if anyone who's listening to this podcast is involved in any form of financial services, they will be able to appreciate what level of work has been done. But we're talking really about international cooperation reporting, CRS reporting. That's been a major development in the last 20 years, which has mean that, people can't hide. Actually, they can't say one thing in one jurisdiction and something else in another jurisdiction. People with high levels of wealth are under scrutiny, quite rightly so. And and they're ensuring that the right tax is being paid, the right assets are being disclosed in the right place, and that is kind of out of our hands. We have to comply with the rules, and that's it. And we gladly do so. We gladly do so because it means that as an industry, we've been able to quite plainly market ourselves, to be able to reach clients that we wouldn't ordinarily have reached. And also for us, it's peace of mind that we're not dealing with those who have perhaps gained their assets through unfair means, or who are involved in activities which we wouldn't want to be involved in.
Good to hear this.
It's actually quite nice for us to be able to do that. It means you can quite freely market yourselves.
Yeah, I was not expecting another answer from you.
Well, of course, yeah.
Okay, so interesting to better understand what you do at Saffery Champness. If you could take 5 minutes to explain to us what you do, and after that, I would like that we focus specifically in digital assets. But first, can you please present what you do?
Well, we are a global company established in 1855, which is quite a long time ago, as old as some of the Swiss companies and financial institutions we deal with. So we have a good heritage. It's originally a UK company, now with 15 offices worldwide and over 700 staff members. There are two arms to the company. The first arm is the UK tax and accounting arm, which is still very strong and one of the top 20 UK accounting firms. And then we have our trust company bases, which are in Switzerland, Guernsey, Dubai, and Cayman. And we are dealing really with more of an international client base, looking after their structuring needs. So solving problems for them, which are relating to, like I said before, complex transactions, succession issues, and those kinds of things.
Okay. I had a great discussion with Biba Homsi, who kindly made the intro to you.
One of my favorite people.
What?
I love her. She's one of my favorite people.
Yeah, she's great.
Powerhouse.
Hi, Biba, if you listen. Yeah, so in the domain of digital assets, and this is why it was interesting to have that discussion with you, we hear that there are a lot of structures that are built, be it foundation or trusts in Switzerland. What are the biggest challenge that you've seen for high net worth individual when they organize digital assets?
Well, it depends actually, Celine, who you're talking about, because there are many types of clients and people and high net worth people who hold digital assets. There isn't just one size fits all. So broadly, we would categorize those we come across with digital assets, those high net worth individuals, as either a pioneer, which is an early adopter, someone who got involved early on, managed to make, even perhaps unintentionally just playing around with the technology and found themselves in a situation where they've created quite a lot of wealth through digital assets. The typical put 10 quid into Bitcoin, and 14 years later, they end up with a few million quid. Then we have, say, a pro, which would be someone who is quite involved already in investing, perhaps someone who is from the traditional financial market, an experienced investor, but is now evolving to diversify their investments into, say, crypto assets. Curious people generally, also interested in in finding a new place to make money, I guess. Yeah. And then we have the explorer types, which may well be the next gen of a family who is a high net worth family. So these are the 18 to something year olds who are pressuring their high net worth parents to invest in Bitcoin, or maybe collecting it themselves. And then we have perhaps founders. They are also a set that we deal with, who are really deep in tech. They are they are looking at the industry. They really believe in blockchain. They are creating the products, creating the services. They're really one-minded, single-minded that way. They all have slightly different needs and slightly different challenges. But, as a general rule, I would say that, especially for the younger investors, they would be often, there is a lack of understanding on both sides, I would say, in the traditional fiat world and the finance industry, as well as from their side looking in at fiat, and a lack of understanding and a lack of trust.
Of course.
So that's often a big issue, because our usual way that we would receive clients is through introducers. We have a complex product and it's not always easy to understand. So therefore, we rely on a stream of introducers who do educate the client for us, and they are credible in their own right. So clients who are advised that they need a trust by these people would generally say, okay, yes, we need a trust. Where in this case, it's quite interesting because often these younger entrepreneurs are not very trusting of the traditional advisors network. So that includes lawyers, includes, finance industry. So it can be very tricky for them to make that segue. However, they may have made a lot of money and need to really diversify it. As you've seen, a lot of money is value, is won and lost in that industry. So for them, it could be a good idea to diversify. So it's really kind of an education. They're interested maybe, but they don't trust, and they are not really knowledgeable about traditional finance products. Other issues are kind of quite logistical. For example, we find often that they have a nomadic lifestyle, and their assets then are affected by that, because where they are, sometimes then their assets are also caught in the same tax or same succession net. So they need to be very careful that they are not falling into tax traps where they are quite happily traveling around the world, and then their assets are in a risk situation because of that. Safety and privacy, of course, for anyone who is involved in blockchain companies, who are holding shares, for example, or they're involved in blockchain in some way and are quite visibly high net worth. It's probably a good idea for them maybe not to have their assets in their own names. And also then we've got special purpose. And a lot of the clients that we deal with in their private capacity have come through us through the businesses that they have created. So, for example, they will need to create a company to hold shares or to receive the funds that they are gaining from their activities in blockchain. That's the way they come. So let's use as an example, maybe a DAO. You would have a DAO scenario where you would actually require a legal entity to be able to receive and hold the assets, to transact, etc. And they may come to us in that capacity where we're able to help them. And then we look at their personal assets as well. So we have lots of different directions that clients come to us from in blockchain.
Okay, interesting. So when we prepared that discussion, you were mentioning that you had a lot of partnerships or contacts with custodians, with managers. I was thinking of Coinify because I saw that you mentioned one specific partnership with Coinify, but what is the typology of service provider that you generally select for your clients? And can you give some context to explain to us the way you work with them using maybe a use case?
Yeah, for sure. So we rely quite a lot on the ecosystem, like I mentioned to you before. So the way that we work best is in conjunction with a team or a toolkit that the client has of numerous advisors. We're not just the sole advisor. We can lead or we can follow, but generally we help to collaborate with lots of different advisors. Where you have great wealth, often there are lots of areas of expertise to tie together. So the ecosystem is really important to us, of the advisors that we choose, so that we can give our clients the best service. Switzerland is a great place to be because of its stability of legislation around crypto assets and blockchain, in comparison with, say, other parts of the world where clients' assets could maybe be viewed in an ambiguous kind of a way. So it's really fantastic to be in Switzerland. And we're seeing very much that where we didn't have, maybe a couple of years ago, we would have struggled to find adequate custodians to deal who are regulated, who are, of the same mindset, who we can trust. We're now seeing many more. So some of the traditional banks are actually offering not only just services for custodian services, but actually offering discretionary portfolio services, which is quite amazing in crypto assets. We also are very keen to put in place this infrastructure to make sure that we can service the clients really well. So, you mentioned Coinify. That's really important to us. Coinify is because our clients would like to make their payments in crypto. Why not? Their assets are in crypto. Why wouldn't they want to pay us with the crypto assets that we're holding in the structures for them? So that makes perfect sense. So we're constantly looking out for new types of providers. For example, we have another partnership that we have recently opened with Hop Trail, which is a specifically compliance orientated company, that they actually help us to onboard the client. So they're looking at the client's compliance journey. We're talking source of wealth, source of funds, enabling us to present a full picture to our compliance department in a very cohesive way that enables us to explain to our auditor how those clients came across their assets, how those assets were built, the provenance of those assets. So that's the type of use cases that we have for the different partners that we have.
And if we take the example of when you build a trust for one client and then you incorporate the trust with the crypto, the digital asset in the trust, how is it happening?
Well, normally, I mean, it depends. There is many hoops to jump before we get to funding the trust with crypto assets. But any entity that we have. So we will get legal advice first of all. The legal advice will be the overriding way that we implement the structure. So we are not advisors. We use advisors, and then we implement the structure and we run the structure and make sure that it's done in the correct way. We choose the custodian. So first of all, we get the advice. We make sure that the client's happy with the advice. We ensure that then the trust legislation the right trust law is selected and the trust deed is drafted in that trust law. So we have obviously a network of advisors who do that. Then we're putting in place entities that might go under the trust. So that might be incorporating an entity via our Cayman office, for example. There is a strong legislation for blockchain and for crypto. And then we will open accounts with custodians to ensure and have those funded and look after them within the trust. And we need to ensure that all the contracts are in place, that, whether this is it could be crypto assets, it could be NFTs, for example. We have a great case where we took on board a client from our Guernsey office, actually. There was an heir who was an heir to an existing fortune, who was a collector of crypto and had about 300 NFTs, which needed essentially to be sorted out. She'd just been collecting them, lots of different wallets, lots of different types of NFTs. And actually, with NFTs, it's all essentially a contract. It's a smart contract. And all of those contracts needed to be reviewed. So we needed to go through them systematically with an expert in NFT contracts, ensuring what the rights were, what the image rights were, if there were any triggers in the contract, and make sure that was all in place. So, that's one example of how we looked at that. And of course, we engaged all the advice. We ensured that they were held in the right way.
Yes. You select one specific custodian?
No. Generally, we would not usually advise to go unless they have a real wish and desire, which is. It can happen as well. They've worked with someone right from the beginning, with Coinbase or someone who is not necessarily regulated in, say, Switzerland. We would prefer to work with Swiss regulated custodians, but actually we are open, we are agnostic, and we would always tend to diversify if possible.
Yeah, but if the client wants to select one specific, so you were mentioning Coinbase, it's an option. But would you recommend the client not to hold the digital asset in one specific custodian because you performed the due diligence and you realized that it was not safe enough?
I think just as a general rule, I mean, even across normal fiat assets, we would probably not advise our clients to just choose one custodian. So where there is a lot of wealth, it makes sense to diversify, not just across assets, but across custodians as well. So that's normal. We didn't really have too much choice in the past, maybe say 2 or 3 years ago. But now we have many choices and many options for well-regulated custodians who are offering a very good and reliable service for the clients.
And when you mentioned the KYC that is performed, it's a KYC specifically dedicated to client holding digital assets?
Well, actually, no, not really. We're applying the same rules. I mean, the rules haven't changed. We're still talking about making sure that we comply with anti-money laundering, making sure that we comply with source of wealth verification, source of funds verification. So essentially, it's the same rules, but the mechanism is slightly different because obviously we are not. It's easy. When you have a client who sold a big company, you say, okay, well, give us the contract and we can see that where that has come from. But when you have a client with crypto assets, then we don't have the necessary expertise to go in and ensure all the wallets are, as he says, and the assets have come. So the great thing about digital assets is that it is all verifiable. Actually, you can go back any number of hops and see where those assets have come. You can get a risk rating on them. And this is where someone like Hoptrail comes in, where they help to put that in a way which is readable for a compliance department, and isn't too woo-woo for them to understand, too techy, so that they throw it out. That's the whole point of what we do, is translating the language of the digital world to the fiat world, where we're helping them to put that in some kind of order, and where it's recognized by the normal fiat financial system.
Okay, going back to the typology of clients in the domain of digital assets, I was thinking of builders, because I have received the CEO of NEAR Foundation, that you probably know, and I was thinking of builders. So NEAR it's a layer 1 protocol, but those developers, those builders, when do they feel that they need to create a foundation? So foundation is an example, but is there a trigger, a moment where they are major to do it?
Yeah, there's a few different triggers. So the triggers can be personal, or the triggers can be business related. The business related triggers are, hey, I've got a company, actually, or I've started something already and it's in my own name, and I should actually have put it in a company, which is really, I don't want to have it taxed in my own name. But generally, it's they're creating something and they're looking for the best possible way that they can start those activities. They've created an asset, they've issued a token or something similar, or they're creating a DAO, for example. And they will generally reach out and get some legal advice, and the legal advice will say your best options are A, B, C, and D, foundation or a trust or a purpose trust or something similar. And in that case, then they will refer them to us. The legal advisor will refer them to us, because we are the people who implement. We create and implement. So they will do the drafting, they will do the legal advice. We take that advice and we implement it, and we make sure that it's run in the right way.
Okay, excellent.
So that would be that trigger. The personal trigger would be something like moving country, for example, or a risk to an asset, or someone in the family is perhaps getting married, or there is a life event of some description that poses some kind of risk. Like the most recent one, I would say, and one of the big clients we have went to the UK to live. And so in the UK, there are very specific tax laws about your assets when you move to the UK. He was going as a UK resident dom, and the usual structuring protocol that you have is to create a trust before you go to the UK, and therefore you're not taxed on all of the trust assets, all of the assets that you're bringing in. You're just doing it on a remittance basis. So that's when we would get involved, and we would help him with that.
And how do you see the regulatory landscape evolving in Switzerland?
Switzerland is any regulation, as you've seen from the many explosions that have happened in blockchain and in crypto over the last 1 year or a year and a half, 2 years, I think we welcome, and I think even the most hardened, decentralized blockchain founder is probably now recognizing the requirement for some form of compliance and some form of regulation. So I think the issue is whether you're looking at it from a US perspective, where they really are just, flapping around and, making crazy decisions that aren't based on real knowledge and real discussions with people who are operating in the industry. And I think the Europe and of course Switzerland is far ahead. And the funny thing is, Switzerland was almost priced a little bit out of the market because of the amount of regulation that goes on here. And it was almost priced out of the market. Now we're seeing much more interest in Switzerland from founders who are happy and willing to have some oversight regulation. They want to be associated with that because it gives credibility to the project. I think Europe are more definitely more rational and more likely to come up with a better solution than the States are. So for us, it can only be good. And for our industry, we can only say it from our own experience that actually it's improved our industry immeasurably. So I do feel that while there is something to be said for innovation, the way that the innovation was rocketing ahead without any view on protection for general public was not a good thing.
Yeah. Thank you, Siobhan. It's already the end of our discussion.
Oh, okay.
It went very fast. As you know, I always ask for a recommendation from the guests. So what do you recommend today to us?
I don't read books anymore. I read books through my ears these days, Selene. I tend to devour them, actually. So I have literally just read a book, which has been one of these books that's a bit transformational for me. I have a few of them. And this is one of the books that has really transformed how I do things. It's called Genius Foods. And this is all about how food interacts with your brain. And it's about having a healthy brain. And it completely captured me because it gave me the statistics and the data. And I love data. It's my favorite thing. It gave me the data behind why we should be eating certain foods, why certain foods are good for us. You know, the fallacy of the last 40 odd years of low fat, high carb types of diets and giving us a new way to be, which is actually an old way to be because it's all of the traditional rules about food and what your grandmother may have told you. So I would recommend anyone to read Genius Foods because it will give you a new way to view what's going into your body.
Thank you very much for this book recommendation, and thank you for being clear with trusts and foundation and in the domain of digital asset. That was not an easy exercise. Thank you, Siobhan.
Thanks very much.
Thank you all for listening and sharing this moment with us. Don't hesitate to contact me on Twitter or LinkedIn to share your comments and reactions. You can also rate this episode on your favorite podcast platform. See you soon.